In the residential sector, we've had a really mixed bag last year. So first-time buyer numbers actually remained very strong despite all of that negative conversation. They were the highest level since the global financial crisis.
We've had the farming profitability review, and in fact our farmland value forecasts do indicate that into 2027 we will see a return to growth as that policy clarity emerges again.
While viability and confidence remain a challenge, they may also be an opportunity for investors going forward.
Welcome to the Market in Minutes, where we discuss the latest trends affecting UK real estate. Today, we're filming at British Land's 1 Triton Square in Euston, one of the next generation of blended office and lab space. I'm Emily Williams from Savills residential research team, and today I'm joined by my fellow researchers, Joe Lloyd from the rural team and Matt Oakley from commercial.
In this episode, we'll be looking at what is going to prompt people into action in 2026. And we're not just going to be doing it for the commercial sector. We'll also be considering rural and residential sectors too. We'll be considering whether factors such as confidence, policy and viability will continue to have an effect in 2026 as they did in 2025.
Our core theme this episode is confidence, and this was really driven by the latest Ipsos Mori survey that suggests that confidence in the outlook for the UK economy is as weak as it has been since either during the global financial crisis or the winter of discontent in the 1970s. So, Joe, starting with you, are there signs in the rural market of more confidence this year?
I think, rural is a blank canvas almost that you can do almost anything with, really, within reason. So I think one of the things that always tends to come forward in forums such as this is development. It tends to come to people's minds when we're talking about property. And I think if you do have the right piece of land with the right conditions around it, then development is certainly something you should be considering as part of your land use strategy. We did a bit of research alongside Emily that looked into the capital value uplift from your bare grade 3 arable UK average type of land all the way up to a residential development with reserved matters approved. And we found a 35 times uplift in the capital value. So realising that kind of uplift is certainly something that people, I would imagine, are going to be interested in.
Yeah.
In fact, Emily, you're probably more qualified than me to talk on where that really stands out.
So it's a really interesting time for development in the residential world at the moment, because there's a much more positive planning environment following the changes to the MPPF that came through at the end of 2024. And there's also been some policy changes giving more flexibility around affordable housing tenures recently that should unlock viability on some sites. But we haven't necessarily seen the bounce in activity that you might have expected. So planning consents or planning applications only really back at around about 2023 levels and a long way off where they were as of the peak of activity in 2018 or 2019. And what's really holding that back has been the lack of wider transactional activity, so lower sales rates for house builders, which means they haven't necessarily had the cash flow and therefore the confidence to make those investments in bringing new sites forwards. Are you seeing any similar trends in the commercial sector, Matt?
Well, thankfully, policy doesn't often turn its eyes to my world, but confidence definitely is a thing. Development activity across most of the commercial property sectors is at pretty much record lows. The one exception to that is the central London office market, where there has been a bit of a pickup. But we have been under-delivering really across the whole market since the Brexit referendum, and this is all about confidence. But there definitely is a feeling that while viability and confidence remain a challenge, they may also be an opportunity for investors going forward, because one of the worst things that can happen in my world is someone comes and builds a better building down the street than the one you own. So a lack of development isn't always a bad thing.
When it comes to development, it all begins with land. It all begins with rural. But after rural and after land comes infrastructure, a complex web of assets which keep everything moving. In our latest Spotlight on Infrastructure, we discuss whether the UK is in fact spending enough on infrastructure, if the Planning and Infrastructure Act will improve the situation, and what landowners and developers can do to improve outcomes for all parties. It's interesting you mentioned confidence being a bit lower. I think we've seen certain trends indicate the same kind of thing, really. I think ours derives probably more from policy. We've had a lot of unexpected announcements. The most obvious one to all sectors from the rural sector has been the changes to agricultural property relief, business property relief, inheritance tax, But we've also had a quicker drawdown of the basic payment scheme than we were expecting, and the sustainable farming incentive was actually taken out without notice as well. So policy has definitely created in 2025, I think, some uncertain times, and we've had challenges there. But I think we've seen also towards the end of 2025 some policy decisions coming forwards, a bit more clarity. We've had the farming profitability review, and in fact our farmland value forecasts do indicate that into 2027 we will see a return to growth as that policy clarity emerges again. But to throw it back to you, despite that decline in confidence, do you expect, or can you see some other opportunities around?
Yes, I think so. Last year was definitely a better year. It was actually an average year in terms of commercial property investment volumes, with turnover of just over 53 billion. And entering this year, I do think there's definitely a feeling that people want to do more. Whether it will get derailed by other black swan events is hard to say. But really, pricing movements haven't happened in my world, and we do need more sort of competitive tension this year to drive a pickup in prices.
Yeah, I think that point around pricing is really interesting, and whether markets have adjusted. So in the residential sector, we've had a really mixed bag last year. So first-time buyer numbers actually remained very strong despite all of that negative conversation. They were the highest level since the global financial crisis. And the mainstream markets performed reasonably well, if relatively unspectacularly. The bigger challenge has been in prime, and that was where there was much more impact in the run-up to the budget, with rumours around changes to property taxation. And what we think we saw there in prime central London was prices falling by around about 5% over the year. And I think the big question for 2026 is, has that market now fully adjusted, priced in those tax changes, or are there still some adjustments to come? And that will become clear over the next couple of quarters. Viability has been the key challenge in brownfield development over the last couple of years, but the numbers are very different depending on where you are in the country. Our mixed use monitor looks at how things stack up across key regional cities in the UK, whether delivering homes for sale, for rent, or across a range of commercial uses.
Remarkably unremarkable and unspectacular. It's all a little bit pessimistic. What is going to build confidence to act into 2026, do you think?
So in my world, in the residential world, it is all about mortgage affordability. So continued cuts to the base rates, hopefully feeding through into slightly easing mortgage rates, will be the main driver. And that has lots of knock-on impacts. So as sales rates pick up, we will see more development activity, more planning activity as people get the confidence. And from a policy perspective, rumours at the moment about whether the government would look at reintroducing a buyer support scheme like Help to Buy, and that would really be transformative on the development market. Prime is a little bit more complicated, but I think the main thing is hoping for a period of political stability and no more rumours about future changes to come, which would just allow the market to sort of settle at its new level and for people to rebuild that confidence.
I think it's a sort of similar story, really, when you get to the commercial markets. As I said earlier, there's a little bit more confidence this year. There's definitely seems to be a desire to do something this year, whereas maybe some people were looking for a reason to do nothing last year, or delay decisions. But I think we can be sure there will be more surprises this year. And the big question in my mind is, have we just got used to these levels of uncertainty? Are we more capable of actually making decisions against this background of constant noise and constant turbulence? I'm an optimist. I think it is. We have got to that stage mentally. So we're predicting that investment volumes in the commercial property market this year will be up about 10% on last year. And we might even see some price rises.
I think we're experiencing the same with all that uncertainty and confidence policy. There's a lot to be said for actually defining your own path and carrying on that way. So we look at all the different land use drivers that have emerged over the recent years. It used to be what we call the 3 Fs: food, fuel and fibre. You were growing food, or you fuel or fibre. Now we've got a whole range of opportunities from energy. We are switching over to a spatial approach to energy planning, but for the right piece of land in the right place, you can still find opportunities for solar, for wind and so on. Biodiversity net gain, a lot of the assets that we're talking about here today, infrastructure, residential, commercial, all of that will require some amount of biodiversity net gain. So the credits will be an increasingly important market for rural as well. And I'm sure all of us here want new experiences, bit of well-being improvement. We do feel that the rural sector is uniquely well placed to actually deliver those improvements in well-being or those new experiences. So tourism, leisure, events, another way that we can use our land to deliver returns. Ultimately, it comes down to what the landowner wants and what their vision is for that land. And once they've got that established, they can move forward with their own vision.
I think we're all feeling more confident about 2026 than we were in 2025. The policy environment seems more calm. Confidence is definitely starting to improve, and investors, developers, and homeowners able to make decisions that they perhaps weren't prepared to make last year. This presents more opportunities for everyone across the whole real estate spectrum.
We hope you enjoyed this episode of Marketing Minutes. If you'd like to find out more about anything that we've discussed, you can find all of our research available on the Savills website under Insight and Opinion.